Good morning, good morning, good morning. It's Monday, and I'm talking about a stock I never thought I would be talking about, but I'm talking about Boeing. We just got some huge news that they cleared a key hurdle to resume the 787 Dreamliner deliveries. I have not been bullish on Boeing. It's the type of company I really generally don't like investing in. But what I want to figure out is with the recovery in travel, and with this news that they're going to be able to start delivering these Dreamliners, and with increased defense spending, and how just crushed Boeing has been, is the stock actually a buy? Let's figure it out. So the news is that the Federal Aviation Administration has approved Boeing's plan aimed at addressing problems with the 787 Dreamliner. A major step before the company resumes deliveries of the plane that have been halted since May 2021. The move should allow Boeing to deliver its first 787 within days, but the company still must submit relevant paperwork to the FAA, according to the report. Boeing said it had 120 of undelivered Dreamliners, which analysts estimate are worth more than $25 billion in its inventory at the end of June. So that is massive. All right, so we can see over here the stock is up 4% pre-market. If you go out, though, 1 year, stock is still down from 231 down to 156. And then over 5 years, it's down from 239 to 159. So it's been a tough 5 years. Let's even see over the last decade. It's up from 72. So it's up about 100%, a little bit more than 100% over the last decade. So question is Boeing a buy? Let's look at the valuation. We can see that if we take out all this stuff since 2018, right? And we're just looking at it heading into 2018 before all the madness, their normal PE ratio was 19.7 with 9% earnings growth. So to start to get an idea of if this thing is overvalued or undervalued compared to normal operations, if we think they're getting back to normal operations, we need to look at how they were growing before all this chaos started. And so what I've pulled up here is ticker.com, TIKR, and we are looking at their revenue. This is a lot of numbers, right? But we're looking at their revenue growth from 2002 to 2018. And we can also look at how their EPS was growing, their earnings per share. And so this is back in 2008, 2009. That was tough, the great financial crisis. But in 2010 to 2018, it grew at 138%, which is off that number. So really, we're looking at 19%. They had a down year in 2012, but then they had 16%, 23%, 1%, 5%, 76%, and 28%. So a little bit cyclical, right? But I mean, on average, somewhere 15 to 18, 20% on average, if we wanted to think about averaging that out over time. And we can also see that they were at about $17.85 in earnings per share in 2018. All right, so let's jump back over to here to Fast Graphs. And what I've done is I've taken and put in analyst expectations. So that's these first 3 years. So this year, 81% EPS growth, still to negative earnings per share. 393% growth next year. So they're expecting, some of that travel or some of those purchases to come back online. Impossible to predict how that looks, though. It all depends on these approvals. But only getting EPS to 514 per share. And then in 2024, 44% growth, which seems like a lot, but still they're only at 7.4%, which is lower than it was in 2018. And so I've gone in and added 20% over the next 3 years, which gets us ending at $12.85 in earnings per share in 2027. And if we remember, the average PE, I think, was around 18, 19, or 20. And so let's just see what that looks like through 2027 if we get back up to a PE of 17. You got a 9% annualized return for a 55% total return. At a PE of 20, it's 11% annualized for 75% total return. And a PE of 22, 13% for a 95% total return. All right, that's just some rough ideas based on PE, which is like impossible to predict, but over the next 3 years, if you believe in this turnaround, if you believe in this story, then it looks like Boeing is kind of worth taking a look at, right? If we jump over here, and we want to get a bit of a longer term view, we want to do a 10-year sort of model. We could use low, medium, and high assumptions. This is the Everything Money website. I'm a paying subscriber. This is not an advertisement, but I like to just shout out if I'm using somebody's software, their platform. What we need to figure out is some rough ideas of revenue growth, profit margin, free cash flow margin, and then price to earnings, which we looked at before, and price free cash flow to sort of build this model out. Well, we could do a couple things. We can look at what analyst expectations are for earnings per share and then revenue growth through 2031. Now, again, if you look, there's only 2 analysts at 2026 and then 1 analyst in there from 2026 to 2031. So these are not going to be super accurate, but we could still model this out a little bit, right? And so it looks like towards the latter half of, this 10-year time frame, we could look to expect maybe 4% on the low, 5% on the medium, and 6% on the high for revenue growth. So we'll try that out. So we'll actually do 5, 6, and 7%. Profit margin, the best way in my opinion to do this is to look back at what their profit margin was under normal operations. So before all this crazy delays on the Dreamliners and stuff happened. And what we can see is during this sort of normal time, they averaged about 5, 6, 9, and then 10% profit margins. So that gives us an idea of what our range could be. Maybe 7, 8, and 9%. 7, 8, 9. Okay, free cash flow margin was actually 8, 12, 13. It's gonna be a little bit higher than their profit margin. So we'll go 9, 10, 11. And then PE, we'll go 17, 18, 19. Price free cash flow, we'll go 18, 19, 20. And then this is a riskier stock, so generally I do 13% annualized return. Let's do 14% would be what we're looking for. Let's say annualized, I have no idea what's about to come out. If we think these to be true, even with this excitement about Boeing right now, the stock still looks overvalued on a multiple of earnings in the low, the medium, and high. And again, these numbers could be way off, but it's just my assumption. This company is outside of my wheelhouse, so I would have to be super comfortable. And it looks like an amazing opportunity in order for me to consider getting away from, what I think I'm good at, which is like tech, software, SaaS style cloud stocks, and into something like Boeing with as crazy of a complicated situation as they have with all these FAA approvals. It's stuff I don't know anything about. So I think the moral here is that it's exciting what we're going to see in the headlines. There might be some type of short-term opportunity or something like that in Boeing, but it's a lesson about figuring out what type of investor you are and knowing where you're comfortable. And I know that I'm not comfortable investing in a company like this. So even though it looks attractive, I'm just not able to make that decision and invest in it. And but some people might. And good luck if that's you. I wish you the best.